Hey, what's going on, guys? Good morning. Welcome to our morning note. My name is Carlos Garcia. I'm the founder and CEO of JR Capital. Welcome aboard again. It's 9 a.m. Wednesday, February 26th. Let's go ahead and talk about the market, shall we? First things first, what a wild ride the last 2 days. Absolutely crazy. Yesterday we did pretty good. 10 trades, 10 puts, rocking and rolling. So a little bit of a side note, yes, you can make money in a down market, guys, with options. So again, it doesn't hurt to have that trading ability. Sure, your portfolio gets a little bit of a hit. Of course, you'll bounce back down the line, but puts are the way to go. As long as you have volatility, you can make money in options, guys. Just remember that. So, rock and rolling. Good morning. Good morning, everybody. Welcome to the chat. And, well, we have the chat room here, obviously. And welcome to the video. Let's go over the futures market. Dow is bouncing back slightly. We were down pretty ugly, right around 5 a.m. at 30.91 on futures, on S&P futures. Dow futures are up 54. We were up 120 at one point. We were up 180 last night. Nasdaq is up 38, and the S&P 500 futures is up 9. So a couple of things here. Bitcoin is down again, right around the 9,000 handle. VIX is down 6%. The dollar is up today. Crude is down again, below $50 a barrel. So that's good news. At least gas will be cheaper. Looks like treasuries are selling a little bit today. So that means bond yields are going to come back up. Are going to come back up a little bit. They're going to bounce back. Remember, bond yields and bond prices move inverse. So bond prices go down, yields go up, and if yields go down, bond prices go up. Gold is down again, another 1%, and silver is down 2%. Now, people have asked me, oh, why would gold be down during a down market? It's a safe trade. It's a safety play. Yes, but understand that gold had a huge rise up too. So it could be to the point of just overbought, and people took profits on that rise. So don't be as, just be at that point of just gold is the safest thing in the world. Yes, it is. Don't get me wrong, it is. But I mean, watch the charts, guys. Price action is everything. Look at the charts. That's the way things go. So you can keep an eye on everything. Yesterday we played SPY, Qs, and IWM. We just played the indices, and we crushed it. And I think when you have a downward market, you want to play those because they have the best volume, and you can look at those charts. Another thing too, when you're falling in the market, the hourly is not going to help. The hourly is going to be very difficult to chart because you can see you're just kind of zooming out constantly. So the best thing here is I move up to the daily, and then I can start looking and start playing a little bit of seeing some alerts there. And for Qs, for me, I think the lowest support we're going to get to on Qs in the daily is 209.25, which is the 100-day moving average. And of course, you want to take a look at like Apple. I have an alert placed at 278.26. If we go ahead and break that, then I would actually buy some more Apple. But I didn't buy any stocks yesterday personally. Some of our members, our investment club, I think they bought some. They sold some space before earnings because they took profits. Good for them. Again, I told them, if you want to take some profits off the table ahead of time on Space, which is Virgin Galactic, SPCE, I still own my shares. I don't plan on selling them. But again, I have a longer term horizon, guys. I practice what I preach. This money doesn't exist to me, at least for 5 years. When you're investing, guys, keep in mind, if you're going to put money in a stock or a company, by buying shares, 5 years is the minimum. If you need the money within 5 years, whether it's you're going to buy a home, buy a car, pay for a college or a wedding, forget it. That's not going to work. That's trading. So no, more than 5 years if you're going to invest in a company. So a couple things I'm going to be watching on the watch list: Qs, IWM, SPY, anything that get hammered over the week and we get a bounce. Again, I'm not saying we will. I mean, we could get a flat day. We can get a continuation selling. I don't think we're going to get another 900 point, 1,000 point drop, but I thought that yesterday, and we were wrong. Yesterday, guys, in the morning, the Dow was up 130 points. It was almost a sucker's rally. Everyone trying to get in, and then it got sold off. So what we did, we paid patient, and we see how the market went. 6 p.m. today, the President Trump is going to have a press conference on the coronavirus. Let's see if we can kind of change the narrative or control the narrative on the disease as headlines are going crazy. People are panicking. Obviously, the stock market is not liking it. So again, guys, stick to what you're doing. Again, 2 days does not change your investment plan. Keep in mind. Don't panic. No one makes a dime panicking, but use this as an opportunity to get into companies that you've been wanting to get into and you wanted to buy cheaper, that you're going to buy a little bit of a discount. Apple is around 10% off its highs, around 12% off its highs. Maybe you can take that discount. I'm not saying you should buy it today. No, but again, keep an eye, have your levels. Don't buy in all one shot, buy in blocks. If you plan to buy 100 shares, Buy 25 shares one day, 25 shares another day, 25 shares another day, and 25 shares another day. Dollar cost average and get a best price. So again, that's for long-term investing. For trading, keep in mind, when you have a downward market, don't try to call a bounce. You don't know that. Just price action everything. Indicator, the best indicator is your eyes, guys. That's the best indicator. If you see a downward market, you should be writing puts. If you see an upward market, you should be writing calls. Don't be saying, oh, we're going to bounce here, we're going to bounce here. You don't know that. Don't predict, just react. Falling red puts, again, you know the drill. Volume breaks your support, and you want to go ahead and make sure you get continuation. Very simple. That's how we did 10 trades in a row yesterday, because we followed through with our plan. We know we're going to have a down day. We had the continuation. And what did we do? We went ahead and bought puts. Guys, it's really that easy. You really don't have to be a genius to follow the market. Just ride the wave. Don't predict. Yes, you can predict and possibly get it right, but it's not worth risking your capital. If you want to predict all day, go for it on demo, guys. Do it on paper trading. I don't care. But don't risk your money predicting. Sorry, that's my rant. Okay, question here. Jorge says, the boss. No, man, you're the boss. You're the boss. What stocks we're looking at today? So today, again, anything that's been beaten down recently, again, the big names, Microsoft, Apple, these kind of names, the big names that shouldn't be selling off, what is it? What else was moving down yesterday? Well, I don't want to play Boeing. I would say Apple, Google, Amazon, the big cap tech that's been taking a hit. Momentum names, Roku, I want to take a look at. Those kind of AMD, Nvidia, the semis. I kind of stick with a handful of stocks, guys. I only stick with about 10, and I master those charts because I don't want to be good at everything. I want to master a couple. Simple as that. So again, semiconductors have been getting slammed. Take a look at those. If you get a bounce, that could be a play. But again, big cap tech, again, what got us up there and what got us down here? Stick to those names. And of course, for me today, if I do trade today, which I don't know, I'm not in a rush, IWM, QQQ, SPY. Those three. Just stick with the indices and you should be okay. Again, if we get a bounce, fine. If we get a sell-off again, we'll ride puts. If we get a bounce nicely, we'll ride calls. It's pretty simple. Thoughts on Qs and IWM? Yeah, absolutely. Qs, I'm looking here. We're getting a bounce. So let's look at the hourly. Bounce off that kind of support of 215, but we still broke support, guys. We're still lower than the 100. We're still lower than support on the 1 hour. On the daily, we still have a lot left, a lot of level left. If we continue the downside, technically speaking, 209.25 is my level of support. If we break that, just a heads up, it may get a little ugly. We'll get some capitulation, in my opinion. But I don't know if we'll get there. Again, guys, I can't predict. I get DMs all the time. What do you think? I can't predict anything, guys. I'm seeing the same stuff as you. But again, I just react accordingly. On E-mini futures, looking at big picture here. The number you want to see for capitulation, where it basically is going to get very ugly, is a 200-day moving average of 30.47. So you should write that down. 30.47 is the 200-day moving average. If you break that on E-mini futures /ES or the S&P, then it could get very ugly, and that's when you start getting the flush down, a little more of another 2, 3, 4, 5, 6% to the downside. Will this end? Yes, guys, it will end. Everything always ends. You will always have the end of the selling, and then you get people to buy the dip. Equities are still the way to go. We're still the best economy in the world. People are going to buy our stocks. Simple as that. But we did break the 100 on the daily on E-mini futures. That's key. We got to get out of that rut. We got to get out of that first. You got to get around 3170. I would say, to kind of clear the damage on E-mini futures. Now, we're only 30 handles away. Could that happen? Sure. It could happen today. We don't know that. But again, that's what I'm watching. If you're looking at SPY today, SPY, next level down. I'm going to go ahead and bring up the daily. We already sliced through the 100. The 200-day moving average is 304.11. Okay, guys, we break that, it's going to get ugly. So I don't think we're going to get there today. Of course not. I mean, we can. I mean, who knows now? I was wrong yesterday. So I'm going to place an alert at 304.11. The next level I'm looking at personally on the hourly on SPY, SPY, is the new low, which is right around 310. We have not tapped that intraday, only after hours. If we break 310, I'm going to buy some puts on SPY, personally. That'll be my level where I'm going to go ahead and short and all the way down to 304.11, which would be the next stop. Let's consider that a backstop. On Qs, same exact thing. We're here. 209.25 would be the lowest 200-day moving average. That's where I'm worried about, if anything. But right now we're bouncing. If we get back down to 214, which is the intraday low, not the intraday low, the overnight low, then I would go ahead and buy some puts. But until that comes, guys, you need to kind of clear for anything. If you want to clear on Qs for a clear to buy, I would say around 220.44 would be a nice level to start looking at. IWM, let's go ahead and break that down. I would say 156 would be some good puts. I already have some puts yesterday I gave to the members, so I'm in it. Obviously, we'll open red, but again, we had this with Facebook yesterday. We had a Facebook position that was down 76% on Monday and Tuesday at the open. It fell, we caught it for 40%. Takes a little bit of patience, guys. I know it sounds a little crazy, but it does happen. Sorry, I'm going all over the place. Let's see, Tesla looking good here. Let's go and bring up Tesla. I'm gonna bring up the 1 hour chart because the daily doesn't really tell you much. So relatively speaking, Tesla has been holding up, which is nice. If you've been wanting to get into Tesla, for example, you're now at $800. You're about $168 off the high, which is nice. My next level down is 710.69. 710.69 to the downside. I may even buy some more shares. If we break that, it's going to get a little lower. If you wanted to play the upside, you need to break the 100-day moving average on the hourly of 869.29. So keep that in mind. Reef says, hey, Jake, let's get it. Yes, sir. Let's see. Trump said in his Twitter stocks are looking very good today. Well, he said that yesterday. He said that on Monday. Can we expect a bounce? If the bounce was going to happen, it should have happened yesterday, and we didn't have it. So that's what's very interesting. We should have had the bounce yesterday. So can we have the bounce today? Sure. Here's the thing, guys. You have a catalyst to the downside, right? We know that. You see the chart, you see we're going down. Here's the question. What is the catalyst or the reason we should bounce? Other than buy the dip. You got to give me something, guys. There's nothing else. There's no reason to buy the dip here. There's no catalyst. There's no tax cut. There's no Federal Reserve cut. There's nothing to inspire confidence in the individual investor, into the institution, to want to buy stocks here, other than technical breaks. That's it. There's only technical analysis here. So you have the algorithms, the machines that are basically looking at the same chart you're looking at, obviously. And if they see breaks of certain moving averages, 100 and 200, then you start seeing the capitulation, which is more of a downside. But again, in order to get upside, it works the same way. If we start breaking 100-day moving averages, the 100-day moving average on the daily, then you start seeing some buys here. But again, you need a little more than just the president saying buy stocks. You need some kind of catalyst. There isn't one to be found yet. So again, if all things being equal, let's say we have a scale here. The sell side has more of a compelling argument to sell stocks than you have more of a compelling argument to buy stocks, if you know what I mean. I hope that makes sense. Steve says, Apple, Amazon, Tesla, NVIDIA. Yep, we talked about those. Those are the ones you want to take a look. We took that look at Apple. Amazon is expensive, just so you know. I mean, just the price itself, we know that. It looks like we broke the 100-day. We broke the 200-day on the hourly. So let's go ahead and bring up the daily. Daily will really tell us a little more. We have a lot more to go. There is a gap here from the earnings, from 1873 to right around 2000. Well, we could definitely fill that gap to the downside on the daily if we get a continuation to the downside. Do I think we're going to get there? No, not really. I think it's a lot to say. But again, 1957 should be a level. If you break, then you can get down to below 1900. Okay, so Minra. I know everyone's been talking about that one, but we've been busy just shorting the indices. This is Moderna Biotech. On the daily, it is pretty spiked up there. How about this? If you break the new highs of 2780 and we have a volume, we can go ahead and take a look at some trades. I'm sorry I didn't look at that yesterday. I was too busy hitting Qs, IWM, and SPY multiple times again, and my team was just watching that the whole time because we know the indices always have volume and they move the quickest. mRNA, for all we know, their trials can be failed and then you get crushed. I don't like trading biotech for the most part because they're extremely volatile. ETFs, you know, they move straight. There is no spikes, like very sudden spikes. You just get the continuation because it's an index. Just a heads up. We need more fear. Well, if you get more fear, we'll get what happens. We're going to go ahead and short. Simple as that. We talked about Apple, Amazon, or NVIDIA. Okay, one more. NVIDIA, we had calls on Monday. We thought we'd bounce. It didn't work out. Happens. We had the 300 calls. Boy, they look like crap, and they're done, basically. And that's okay. You know, you move on. But we're right at 262. Looks like we found support on that fib line, on the 100-day. on the 1 hour, excuse me. So the target, if we go back up, in my opinion, you need to break 279.15 to get out of this, to get out of the woodwork. And then you could start looking at 290s for some calls, because that would be the gap fill from the first initial fall on Monday. There you go. All right, guys, I hope that really helps. But I really wanted to sink in the argument between the catalyst, buying versus selling. Right now, we don't have a catalyst on buying. All the catalyst is on selling. Can we get a relief rally? I thought we'd have a relief rally yesterday. We didn't. We opened green on futures yesterday, and we fell. We could get that again. I don't think we'll get 1,000, to be honest with you. I don't think we'll get there, 1,000 to the downside, but that just happens. And Target, yeah, we had that Target play that I posted, and it got crushed, guys. It was just the market. I mean, it's going to fall with the market again. All these companies are part of ETFs, and those are sell programs that just sell. So Target is done. I mean, we had exactly the trend we wanted, and this is all coronavirus selling related. It's dead, man. That's more of just a market-wide sell-off than it is just an individual name. Nothing you could do there, guys. All right, guys, we'll go ahead and end it there. If you have any questions, feel free to message us on GAR Capital on Instagram, or you can tweet us at GAR Capital. Make sure to like and subscribe our YouTube channel. More great stuff to come. Have a great Wednesday. Happy trading, and I'm sure it's a profitable one. We'll catch you guys later.